Home bias means a lot of Australian investors have great faith in the Australian share market, but Yarra argues that it is structurally flawed. For advisors watching this, Dion, what are the causes for that state of being structurally flawed as an equity market?
Look, our concerns are mostly around the concentration of the market, and we describe that as being unhealthy. To have a quarter of your market in 4 banks, where the aggregate earnings for those 4 banks was higher 10 years ago, I should say, than it is today, is problematic. 4 banks that are losing market share, 4 banks that are operating at peak valuations with very favourable fundamentals here and now. We think that introduces a vulnerability. As to the fact that the 3 major mining companies are very reliant on iron ore, and in part that China's the source market for most of the demand, we think demand has peaked, supply is picking up, and that leads to a vulnerability. So our concerns are largely that 40% of the market has probably seen its best days, and that's an unhealthy level of concentration to have. That's why we often describe the sweet spot as being in mid-caps, where you're not beholden to a benchmark, you're not beholden to those banks and major miners as I described.